How's it going, guys? This is Forensic Forex Expediante, and I'm back with another video. This is your daily update or recap on gold, pretty much for the month of November. As you can see, right, some things that we can point out now that we're in December. We could point out that the best sell for this month was clearly above November's opening price. That's a no-brainer. That's very objective. We can all agree that the best sell opportunity occurred above November's opening price, which is in a premium. We can also see that price created a swing high formation above the opening price. That's another characteristic. Another characteristic we have is SIBIs or fair value gaps or inefficiencies to the downside, speed to the downside, right? There was the first one. There's a large one here. We were expecting price to either pull back after breaking these swing lows and give a lower swing high to continue the downtrend. I was expecting it to occur in this largest SIBI here, but instead it ran back up into this fair value gap and then created the lower swing high here. And then it looks to probably sell off for December. Now, that's not what we're here to talk about, but we can see how the flow of this market was to break swing lows, create lower swing highs, and continue trading lower. Let's take a look at it on the 15-minute chart just to see the flows, right, in the sequence of this market. So that entire month, you can see now, look how it's broken down here. With a higher time frame, PD arrays on it as well. Hits that PD array perfectly and sells off fast. The best buy or best setup that we had this month, in my opinion, was this one here. We were simply buying below the Asian low. We went into this day speculating into Friday that we're going to have price pull up back into this fair value gap at some point, and we definitely got that, and then some, right? Because I was expecting, right, hit up here and then some type of sell off, but instead it went all the way through, supported it, got to this one, and then sold down. But this idea, the simple idea, ran on for, a great significant amount, to be honest. So from there up, right, not that this is unrealized gains, over $100 move on gold, pretty much $150 move on gold. From that one idea, we could have potentially got that much more out of the market. But we were just looking for something very small, right? A one-to-one scenario, right? A $15 move to the downside or a $15 move to the upside. And we were able to get that. Let's take a look at GU. Daily chart. Similar to gold, right? We can see now that the month has expired, we're in December, we can see that price moved up above the monthly opening price and created some type of swing high. That's the swing high because the candle on the left has a lower high and the candle on the right has a lower high. So that's the swing point there. That's one characteristic of a bearish month. We have a video out on the channel speaking about this, right? The characteristics of a bullish and bearish month. These are the characteristics of a bearish month. We got a swing high that forms above the opening price or some type of Judas or false move to get retail traders to the wrong side for the month. Again, our speculation, of course, I'm not saying everybody's speculation is going to be perfect, but we were speculating a stronger dollar, weaker gold, and weaker euro dollars. So euro, British pound, New Zealand dollar, Swiss franc, Canadian dollar. We're expecting weaker and stronger dollar, especially with what? The new U.S. president being elected. So we saw dollar rise and all these other fiat currencies drop dramatically, which included gold as well. So we got that lower swing high formation that formed here. We can see price ran up and rated it. We were expecting some turning point here. That's why I have this marked off. This was a smash candle theory. Price returns back to that candle's high here. And that's where you would potentially go long based on Larry Williams' idea. And I was just projecting, right? If we were going to probably get here. If we went long, word price probably try to reach to. It would reach to this swing high because it's buy side here. And if then some, right, it could have ran up into this PD array here and then went short. It could still do that going into December, but that's not the topic of this discussion. We're just reviewing this market. We also have a large SIBI, right? At least one large SIBI occurs in a bearish or down month. And you can see it formed right there. So that was nice to see. So speed to the downside or some type of inefficiency to the downside is one of the characteristics to a bearish month. Everything vice versa for a bullish month. So let's just take a look at the DXY. We'll just mark off this November real quick. to December. First, oh, it's a holiday. Okay, cool. A weekend. So you can see, look how price drops down below the monthly opening price and created what? A swing low right here. We'll mark it off in blue for you guys. Look at that. It created a swing low. While doing that, they were getting traders to go short on the dollar. But instead, you can see, I know it's hindsight though, but we discussed this in the daily updates. We always refer to certain moves in the market before it even happens because we do what? Our top down analysis, our macro, our seasonality, our interest rate differentials between the central banks. It's a lot more that goes into how these markets trend and how they're gained in interest or value depending on what the flow of yields, the flow of interest rates. Are we hiking rates? Are we cutting rates? So it's a lot to incorporate, but it's very simple once you've been doing it for a while. I know it sounds like I'm just flowing off the top of my head because I just been used to, going across and tackling the market in a certain way, a particular way. So you can see there's a false move below the monthly opening price that happens to be in a discount. There we go. We got at least one swing low that forms below here. That's where the commercials are probably their most right here, net long, and price runs up really fast. Then we get, let's see, do we get a very large SIBI? No. We get a couple SIBIs. We got one here. Sorry, busy. Buy side imbalance, sell side inefficiency, or fair value gap. We have one right here. We got another one here. We had another one here. And that's pretty much it. So price breaks a swing high. Price creates try to makes a higher swing low. It might raid or run swing lows here, right? There's some false breaks that occur. There was even a false break here, right there. Price ran down, took out this sell side liquidity pool, and then ran back up to the upside. So that's pretty much the recap or final say on gold, DXY, and GU for November. We could do the same thing for December as well. We could look for a monthly filtering process. We look for the months that wasn't really rangy, was really small in nature for December, right? That's a pro because we would assume that if this is a small month, that means December might kick into a large cycle, and that's more um, realistic for us as a trader. We want the market to move. We want volume. We want it to be very fast and dynamic. We don't want it to be lethargic and moving sideways. We don't make money when the market is consolidating. We make market money when the market is moving up or moving down in a fast pace. So that's what you want to do. So when these markets start making these trends like that, you want to take advantage of these opportunities, especially if you are on the right side. You want to go into these days and find those buying opportunities. And most times, my simplest way is buy after a down day if you figured out the trend is bullish. You will probably see some type of potential dynamic movement after the down day. Sometimes you might get a sequence of 3 or 4 down candles or 5 down candles. That happens. No system is perfect. Just a simple lazy trader approach. Same thing vice versa. If you were going to be bearish, let's take a look at gold. That same idea can be applied here. And I sound like a broken record, but I only say it because it's best to inform traders, right? So since this trend is down, it's just hindsight. Let's say we went into this month, we were just speculating gold was going to be down. We could have took the very simple, lazy trader approach and just wait for up days to sell after. Look at these. Look at this. This would have been a headache, honestly, but it happens. Nothing's perfect. No system is perfect. And some things you could filter in, of course. You see a large move down here, you would expect it to fill up. But large moves up, what happens? Eventually, you see this large sell back down. You have these up close candles here. It was a small move back down, up close candle. Now we're heading into December, though. Small down candle the next day. So just very simple ideas if you are a person that doesn't like to be stressed out and intraday trades or sitting there, you don't have the time available to go in intraday. Now, some people have asked me, what am I going to be trading for December? Most likely, I was going to stay away from the currencies because of what's going on geopolitically, what's going on with the dollar, what's going on with BRICS, what's going on with crypto. A lot of things are heating up, a lot of implications. New U.S. president, new regime, new program. So things might be a little funny, especially towards the last month of December or in the last month of the year. So the volume might not be there, right? The certain entities that we see in the marketplace that are normally there where the market is very volatile may not be here in December. Not saying December is not tradable. It's definitely tradable. Definitely would have to look into what asset class. So might want to leave currencies and probably go into like energies, maybe even stay into metals still, and then try to see the rest of the year through. So final month, home stretch, finish strong, stay consistent, do things that you personally enjoy doing. Do not take trading to a level where it's stressing you out. It should not be stressful. If you have a plan and a model, you should be able to go into this market, take the losses, and take it like a man, take it like a champ, and move on and be able to mitigate those losers because your model should eventually get you back on track to being profitable. Hopefully, you found this insightful. Peace.